Hello, wealth tycoons. Welcome back to our channel where we share with you the best business stories. Today we are going to look at Sam Bankman-Fried's story, which is one of the most dramatic rise and fall stories of our time. You may have seen his name in the news stating he was a crypto genius who went from being a billionaire visionary to facing a possible life in prison. But who is Sam Bankman-Fried? How did he go from being a math genius who wanted to save the world to being the mastermind behind one of the biggest financial scams in history? And what can we learn from his meteoric rise and disastrous fall? To find the correct answers to all these questions, we will have to learn the story from the beginning. Sam Bankman-Fried's story begins in Palo Alto, California, a place where tech hopes and big ideas come true. He was born on March 5th, 1992, and grew up in Silicon Valley, which is always buzzing with new ideas. As if growing up there was not smart enough, Sam had the amazing childhood. Both of his parents taught law at Stanford, so they probably were not talking about what was on TV at dinner. Instead, they were probably having heated arguments about philosophy, ethics, and the law. Simple, right? Sam was brilliant. When he was young, he was so good at math and answering problems that it made his teachers gasp. While other kids played video games or worked hard on their math homework, Sam was probably figuring out the best way to trade snacks at lunch. He didn't just go to any college for college. He went to MIT, which is one of the world's most famous tech hubs. He decided to major in physics there. In this case, science doesn't seem to say crypto empire or billionaire in the making, does it? That said, it taught Sam how to think about systems or how to deal with big, messy problems by knowing how the smaller parts work together. He would find it useful to think that way when he was making his own systems too. Sam learned about a way of thinking called effective altruism while he was at MIT. It's like normal altruism, but with a lot more reasoning and spreadsheets. In simple words, do not only good things, but also the most good things you can with the means you have. Sam liked this idea and gave a big chunk of his tiny student income to charity because of it. Yes, he did try to save the world even when he was poor. Sam went to college and graduated in 2014. He then went to work for a Wall Street trading company called Jane Street Capital. He learned how to arbitrage, which means to buy something cheap in one market and sell it for more in another. Selling things on this site is like selling sneakers on eBay, but you are selling money. He was good at it, but Wall Street didn't get him excited. Sam didn't just want to make money trading. He wanted to change whole businesses. He would soon get to crypto. In 2017, Sam Bankman-Fried found crypto, which at the time was like a gold rush. Bitcoin and other digital currencies were all the rage because of how quickly they rose and how volatile they were. But Sam saw something more: chaos, while everyone else either cheered or scratched their heads. There were huge price differences between platforms, making the crypto market look like the Wild West. Someone needed to step in and clean things up. And who better than a guy who loved putting things in order when they were out of order? Sam made the brave decision to quit his nice job on Wall Street and start Alameda Research, a trading company that only deals in cryptocurrency. It was not just another player. Alameda was the star. Company used the price differences like a pro gamer using a cheat code. A well-known case of this company is that famous kimchi premium. Bitcoin prices in Japan and South Korea were often much higher than in the US. This made it possible to make a lot of money by trading currencies. It is said that Alameda made millions of dollars from this. This was just the warm-up for Sam. After dealing, Sam built and launched FTX in 2019, a cryptocurrency exchange that changed the game. FTX was not just another tool, it changed everything. FTX was sleek, creative, and ahead of its time when it came to exchanges. Other exchanges had bad interfaces and few tools. It added advanced trading choices, tokenized stocks, and leveraged tokens, which made it appealing to both small traders and big institutions. Not only did it work, but it was also easy to use, which made crypto trading available without sacrificing sophistication. People in the crypto world took notice, and FTX became very famous quickly. Sam was known as one of the smartest people in crypto because he was able to turn his talent for finding flaws into a platform that changed the industry. For Sam, though, this was just the beginning. There is a lot more to know about how Sam's playground turned tables for him, but before we reach to that point, If you're enjoying watching this video, do appreciate our efforts by liking, sharing, and subscribing to our channel. Let's jump on to the story again. FTX was not just a player in the crypto game by 2021, it was the game. At an amazing $32 billion, the exchange had grown into a giant, and Sam Bankman-Fried was its strangest spokesperson. His hair was always messy, and he wore t-shirts and cargo shorts. He didn't look like a millionaire. He looked more like a college student studying for finals. That was part of his charm, though. He was not like most Wall Street types. He was friendly and odd, and he seemed to represent the new, more personable side of crypto. Sam's fame shot up like a rocket. The media fell in love with him, and his face was on many magazine covers as the founder of one of the most famous cryptocurrency exchanges in the world. A lot of famous people swarmed around him. For FTX, Tom Brady and Gisele Bündchen became brand champions, giving the company the power of their fame. As if that was not enough, FTX also ran a popular Super Bowl ad telling people not to miss the crypto change. In his role as the responsible face of crypto, Sam was seen at conferences, on podcasts, and even in front of Congress. But the shiny outside hid a much less clear truth. Both FTX and Alameda Research were meant to work independently, with FTX as a trading firm and Alameda Research as an exchange. In reality, though, their money was so out of order that it would make even the messiest Christmas lights look neat. The whole thing was built on a base that was not just weak, it was falling apart. But since Sam was becoming more famous and billions of dollars were pouring into FTX, no one seemed eager to look any further. People in the crypto world were too caught up in the wave to notice the storm that was starting to form below the surface. Or maybe they didn't want to. In November 2022, the facade fell apart in a spectacular way. A story that got out showed that Alameda Research's finances were very closely linked to FTT, FTX's native cryptocurrency. The news set off alarm bells across the business. In an instant, what looked like a well-run crypto business turned out to be more like a house of cards. People who used FTX rushed to get their money out before it was too late because they were scared. It was too late, though. FTX didn't have enough cash on hand to handle the huge number of transfer requests. That's because those funds were not just sitting in safe accounts. Instead, they were sent to Alameda Research to pay for risky deals and growing losses. It was like billions of dollars that belonged to regular buyers had just disappeared. It was heartbreaking to realize that FTX had been using customer deposits as a secret piggy bank for high-stakes bets made by its sister company. The damage was quick and bad. Within days, FTX went bankrupt and locked out more than 1 million users from their accounts. For many, their life savings were gone suddenly, leaving them financially broke. People used to think of Sam Bankman-Fried as the face of responsible crypto, but now they see him as the worst of all of them. In December 2022, things got even worse. Sam was caught in the Bahamas, which is where FTX was based, and sent back to the US right away. He was charged with theft, conspiracy, and misusing billions of dollars in customer funds. Prosecutors said it was one of the biggest financial scams ever. The boy whiz who became the crypto king could now spend years in prison. Sam's trial was like a courtroom show that kept everyone interested. The case of the fallen crypto king was broken down in every headline, tweet, and news piece. The prosecutors said Sam was a smart con artist because he had used customer money to support Alameda Research and pay for his fancy lifestyle. They talked about extravagant purchases like multi-million-dollar homes in the Bahamas and huge gifts to politicians. They thought that this person was acting like a genius who only cared about themselves and no one else. They tried to change the story about Sam's case. They said he was not a criminal genius, but rather a young business owner who was overwhelmed by the chaos of a new and unstable industry. They said he had good goals and never meant to hurt anyone. They said he just made bad choices when he was under a lot of stress. But as more proof came in, this story fell apart. Mismanagement and lying were shown in emails, financial records, and statements from former workers. The decision came out in November 2023, guilty on all counts. Sam used to be hailed as the white knight of crypto, but now he has to face the harsh truth that he could spend decades or even his whole life in prison. Not only did the FTX's failure hurt its customers, but it also shook the whole crypto industry. Trust, which is the basis of all banking systems, was broken. People who had put all of their savings into FTX felt cheated, and the whole business was scrutinized. Around the world, regulators started to keep a closer eye on things and asked for stricter rules and a better framework for crypto companies. As the fear spread, investors became more cautious and pulled their money out of risky investments. Businesses that were once on the same side as FTX quickly pulled away from the scandal, ready to reassure their customers with promises of more openness and responsibility. This was a hard lesson for the crypto world to learn. The dream of a decentralized, self-regulating financial system ran into the harsh facts of greed and bad management in the real world. Even though crypto has always seen itself as an alternative to regular banks, the FTX disaster showed how weak it was. It became clear that crypto technology may not work with regular systems. However, it is still vulnerable to the same problems, like lack of oversight, careless behavior, and the risks of unchecked desire. Following the events of FTX, the business world has had to rethink how it handles ethics, duty, and governance. If you want to know more about business stories who changed the industries or fell in it to the ground, you can check out the rest of the videos on our channel. We have covered almost all the business stories you would like to see. Coming to Sam's story, from such a downfall, what is there to learn from this story? Well, first and foremost, we see that desire without morals can lead to terrible outcomes. Sam was very smart. He had a great understanding of complicated financial markets, came up with new ideas in the crypto world, and had a great vision for making an autonomous, efficient financial system. But because he was too ambitious to be stopped, he made choices that were morally and legally wrong. He forgot how important responsible management, openness, and responsibility were as he tried to grow FTX and build his empire. He was determined to be the savior of the crypto world, but this made him lose sight of the fact that making money and growing a business shouldn't mean putting morals last. Because of this, not only did a big company fail, but people also lost faith in the whole business. Second, any financial system needs to be open and honest, but especially one that deals with people's money. The worst thing about FTX was that it wasn't clear what was going on. Even though Sam and his team were in charge of a business worth billions of dollars, they didn't tell anyone how risky their work was or how FTX and Alameda Research were financially connected. People were told that their money was safe, but it was actually being used to cover bad bets and keep a business going that was losing money. It wasn't just bad manners to misuse customer funds. It was also illegal. And while FTX's fall may be one of the most well-known examples of bad money handling in the crypto world, it's by no means the only one. Being open and honest about money matters is important for both customer trust and the health of the whole ecosystem. Many people in the tech and financial worlds have already made Sam Bankman-Fried's story one of the most talked about cautionary tales. His rise to fame, which was driven by a unique mix of drive, intelligence, and charm, made his fall even more shocking. His story shows a very important lesson. Desire and greed that are not controlled can lead to terrible results, even in fields that were started with new ideas. Crypto, which was supposed to be a way to make money free and decentralized, has been ruined by the actions of one person who put his own goals ahead of what was best for everyone else. This is a stark warning that mistakes made by people can ruin even the most advanced technology. As the crypto industry tries to get back on its feet after FTX's demise, the lessons it has learned will play a big role in shaping its future. Will crypto be stronger after this incident with stricter rules and more protections? Or will it stay the unstable and uncertain place that critics have been warning about for a long time? How crypto will do in the future is uncertain, and only time will tell if it can win back the trust it has lost. But one thing is certain, Sam Bankman-Fried's life will serve as a warning. People will talk about, study, and examine his story for years to come. It will show both the benefits and risks of new ideas. We can't say enough about how important accountability, ethics, and openness are in every business, no matter how new or disruptive it is. Lastly, the story of FTX and Sam Bankman-Fried shows that rules don't have to stop new ideas from happening. The crypto space has long been proud of being out of reach of standard financial systems. However, FTX's bad management went unchecked for so long because there wasn't enough oversight. The world of crypto needs to find a balance. There should be room for new ideas, but users should also be protected, and the industry shouldn't fall into chaos. To be successful in the future, crypto needs to be open, take responsibility, and yes, be regulated. This way, the promise of financial freedom doesn't have to come at the cost of trust and safety. So this is all what happened in the world of cryptocurrency. What do you think this man could have done differently? Share your views with us in the comments section below. If you enjoyed watching the video, do not forget to like, share, and subscribe to the channel. If you want us to cover any specific business story, share with us in the comment section below. See you soon.